Good evening, friends. My name is Apte, and I am back with my third video, Accounting Simplified. In this video, we will see how the journal entries are prepared, what is the meaning, and very briefly, we will touch upon how the posting is done. So, the topic is journal entries simplified. What I will try in this video is to explain the logic behind the journal entries in a simplest of way. That way anybody can go to Google and see how entries are posted, but there you will find only the technical language. The more technical details you will get on Google, but in a layman's language, if anyone wants to learn what is a journal entry and how it is passed, then this video will be useful. So let's move forward. And before moving forward, rather, those who might not have seen my second video on fundamentals of accounts, just for the sake of those people, those viewers, let us briefly touch upon what we saw in my second video. We talked about types of accounts, basically three types of accounts, and then we talked on example of each of the account type, that is personal, real and nominal. We also talked about certain features of each and every account. Then we also talked about golden rules, because it is very easy, it is very important to remember all these rules. So we also talked about certain golden rules on how to remember these types of accounts and the rules thereof. Having said this, now let's move to the topic. Just to refresh our memory, there are three types of accounts: personal, real and nominal. Rule of the personal account is debit the receiver, credit the giver. Real account is debit what comes in, credit what goes out. Nominal account is debit all expenses and credit all income and gains. I know along with me you also have actually repeated these rules in your mind just to memorize everything. So it's actually a good habit to, if you want to memorize something, while someone is telling you, also read it in your mind, so that then it becomes very easy for you to remember. Now let's go to the topic of this video, that is journal entries. What is a journal entry? As I said earlier, you will find various technical information about this in other videos on YouTube and also on Google. But if I have to explain this to you, assuming that someone is not aware at all, then how to explain the journal entry to that person? So I have kept that question in mind, rather that purpose in mind, and I have tried to explain. Journal entry is basically nothing but a recording of our actions in books of accounts. Just like someone writes a diary about his daily routine, what he did in the entire day. Usually he may write at the night or next day morning as to what he did a day before or on the previous day. Accounting entries are also like this. Whatever transactions we do, we cannot keep all the entries in mind. Let us say if you are an individual, then you can remember for 1 day, 2 days, 3 days, but you cannot remember as the day progresses, and the number of entries, the number of transactions also goes up. Then it becomes very difficult. So you need to record the actions, that is actions is equal to transactions as far as we are concerned. So we need to record all those transactions in the books of accounts, that is actually nothing but journal entries. One important aspect of journal entry is it has two legs. Just like human being has two legs, journal entry also has two legs. Legs in the sense I am saying it is having a debit and it is also having a credit. Now both the legs need to match exactly. Paisa to paisa, both the legs have to match. If they don't match, what will happen? Just to correlate with us, if we try to stand on one leg, what will happen? After some time, we will lose our balance and we may fall down. Same way, if debit and credit doesn't match, our trial balance will not match. Our accounts will not match. So it is important that debit and credit match exactly. There can't be a difference of even a single paisa. Of course, passing the entries is also a starting point for any new venture or business. And as I said earlier, 100% accuracy is expected in booking all the entries. So these are certain guidelines, or we can say these are features of journal entries. Having said this, let's go to next slide. This is a general format. This is a simplified format. I don't claim that this is a sacrosanct or this is a we need to do the entries in this format itself. It's a generalized format only for understanding purpose. And in fact, nowadays we know nobody passes such entries manually in any book. Everything is done by computer. But for our understanding purpose, since we need to understand what is a general entry, I have tried to explain the format. Uh, there could be additional columns based on the business need, but prima facie, these columns would suffice the purpose. First is date, as to on which day and which date the transaction took place. Particulars, that means what we are doing actually while passing the journal entry. Ledger folio number. This ledger folio number is actually nothing but we need to transfer the posting from a general entry, rather a general, to a general ledger. This we will talk in the coming videos. So let not confuse at this point of time. And there will be a column for debit and there would be a column for credit. These debit and credits have to match. How many line items? These are called basically line item. Debit and credit, these are called line items. So how many line items can be there in one entry? There is no limit. There is no limit for maximum number of line items, but minimum 2 line items have to be there, because as we said, there has to be a debit, there has to be a credit, which needs to be matched. There can be 3 lines, there can be 4 line items, there can be 5 line items. Their permutation combination is also possible. Say these are 4 lines, 2 can be debit, 2 can be credit, 1 can be debit, 3 can be credit. Everything is possible. So what we learned, minimum 2 line items, debit credit has to match, and we need to use the appropriate account. All our actions, in an entry we cannot record if someone goes to a shop and buys a TV. We cannot write here that I went to a shop and bought a TV. So we need to give a meaningful text to our action and put that text in a journal entry. Okay, so far so good, understood. Now let's go to next part. We will see a simple case study here. Will not complex the things. Complicated things will come in the subsequent videos, but at this point of time we will talk about a simple case study, a simple transaction. Transaction is what? ABCD sold TV to XYZ on cash basis at a price of rupees 50,000. Assume that it was a 43-inch branded TV. So the price is 50,000 rupees. Now if we, this also we can call a action of a sale and action of a purchase. Further, if we slice this transaction into various elements, then what all we can see here? We will see a TV, we will see a consideration, that is cash or bank if the payment is made by a check. Then we will also see two parties. One would be seller, one would be buyer. Now, all these elements, all these slices, if we want to correlate with our video number 2 or slide number 2 of this particular video, then we will come to know that TV falls under a real account, because we can see TV, we can touch TV. As we talked in the earlier video, anything which we can see, which we can feel, which we can touch is a real account. Cash also we can see, touch, so it's a real account. Bank also is a real account. And ABCD, that is the seller, and XYZ, who is a buyer, they would fall under the category of personal account. Rule of the personal account: debit the receiver, credit the giver. Rule of the real account: debit what comes in, credit what goes out. Now let us see what and how the accounting entries would be passed in the books of ABCD and also in the books of XYZ. Had XYZ being a individual buyer, then he doesn't need to pass any entry, just give cash and get the TV at home. So now let's see what would be the entries in ABCD books and also XYZ books. For the sake of continuity, I have put the case study here, so that when we are talking about the entry, the case study is also visible to us. Now, what entry would get passed in the books of ABCD? What ABCD has done? ABCD has sold the TV to XYZ on cash basis at 50,000 rupees. So, how much cash ABCD has received? 50,000. What has come in is cash. Cash is a real account. What is the rule of the real account? Debit what comes in. So cash has come in. So in ABCD books, cash would get debited. What has gone out is TV. TV for him would be his stock item, stock for sale. So he would credit TV with the equivalent amount. You can see debit and credit is matching. He can also put a narration here: being TV sold on cash basis to XYZ. 2 is optional here. It's he can also put it, and if he wish, he also, even if he doesn't put, it is okay. This is the entry which would get passed in ABCD's book. Now let's come to a situation a little complex, where XYZ demands a discount. He is a friend of ABCD, so he says, give me some discount, and ABCD agrees to give a discount of 5,000 rupees to XYZ. Then what entry would get passed? Cash has come in, but this time cash has come in, cash that has come in is 45,000 rupees. So in ABCD's books, he would debit cash account with 45,000 rupees, and he would also debit a discount given with 5,000 rupees, because 5,000 rupees is a discount. Now discount account is a nominal account. Nominal account is you can only feel, you cannot see, you cannot touch. So discount you cannot touch. Discount is not a item which you can feel and you can see and you can touch. So it is a nominal account. What is the rule of nominal account? Debit expenses and losses. In earlier case, he was getting 50,000, here he is getting 45,000. So 5,000 indirectly we can say is a loss or an expense for ABCD. So he would debit 5,000 rupees for a discount given. His stock value, his inventory value was 50,000. So he has given an item of 50,000 rupees. As against that, cash received is 45,000 rupees and discount given is 5,000 rupees. 45 plus 5, 50. Here 50. Hisab barabar. Debit credit matched. Now what entry in XYZ's books would get passed? I heard many, many people saying exactly the opposite, but I would not say exactly the opposite, because exactly the opposite, it is not the right way to explain. We need to explain again with the technicalities. XYZ has bought a TV. So TV has come in. TV is a real account. So debit what comes in. He has paid cash. Cash has gone out. So credit what goes out. So here in this case, TV gets a debit and cash gets a credit. 50,000 rupees, 50,000 rupees. Hisab barabar. Now we talked about discount. So what entry XYZ would be passing in his book? TV 50,000, because the real value of the TV is 50,000 rupees. To cash account credit 45,000, because he has paid 45,000 rupees, and discount received he would credit 5,000 rupees. Why he would give a credit to discount account? As we saw earlier, I'm sure you know the answer already, because now by that time you already have memorized, you already have understood the rule of accounts. Discount is a nominal account, and what is the rule? Debit the expenses and losses, credit all income and gains. This 5,000 rupees is a gain for XYZ. So he would credit 5,000 rupees to discount account. He also has an option to book a direct entry for 45,000 rupees. In that case, then he would debit stock good 45,000 rupees and credit cash of 45,000. That is also possible. Absolutely no harm. Clear? Now, next, go to a situation if ABCD has sold the TV on credit. That means he has not received the cash. Everything remains the same. Only change here is, instead of cash, he has sold it on credit. What entry would get passed now? Earlier we said cash has come in. So cash account debit in ABCD's book. Now here there is no cash. There is only credit. Now he cannot say debit the credit. Looks funny to hear this debit to credit, but this is actually the fact. He cannot debit the credit. Sorry for repeating once again, but then as we saw in these elements in the parties, XYZ is a seller, ABCD is a seller, sorry, and XYZ is a buyer. So now what ABCD would do is, he would debit XYZ and this line item would remain same because TV has gone out. Now why he would debit XYZ account? XYZ account is a personal account. XYZ account is a personal account. Now what is the rule of personal account? Debit the receiver, credit the giver. So since here in this case the receiver is XYZ, the debit would be to XYZ. Understood? Then everything remains same, discount of 5,000 rupees. Then instead of 50,000 rupees, debit to XYZ would get 45,000, would be of 45,000, because in the subsequent days, the amount that ABCD would receive from XYZ would be only 45,000 rupees, not 50,000, because 5,000 is discount. So discount debit to TV stock 50,000 rupees. What entry XYZ would pass? TV has come in, that remains the same, real account, debit what comes in, debit TV account, that is stock account 50,000 rupees. Now cash has not gone out, he has bought the TV on credit, so he would credit ABCD's account. Why? ABCD is a personal account. Rule of the personal account is debit the receiver, credit the giver. In this case, ABCD is a giver, so give credit to ABCD. Just to correlate this with the second video, we saw a definition of a debtor. Debtor is a person who owes something to others. In this case, XYZ is a debtor. XYZ becomes a debtor of ABCD because he is owing money to ABCD. and in this scenario, ABCD becomes a creditor of XYZ. Creditor is a person who owes something from others. He has to receive the money from XYZ. So ABCD is a creditor for XYZ. Understood? Now let's take some other simple examples. Now this is a case study for you. Please try to prepare the entries in your mind for all these scenarios. ABCD filled up petrol of rupees 1000 rupees. XYZ went to a lunch and spent rupees 2000. ABCD opened an FD in his bank from his business account. ABCD withdraw cash from the bank, and XYZ deposited cash in the bank. Are you ready with your answers? If you are ready with your answers, let us see if those matches with mine. This entry would be travel account debit to cash, because ABCD has filled up petrol. Now there can be, but logically petrol comes under travel account because he would be using petrol for traveling. So travel account debit to cash. Similarly here, refreshment account debit to cash. Then here, bank FD account debit to cash, because cash has gone out and FD has come in. Debit what comes in, credit what goes out. Simple. Cash withdrawal from the bank, cash has come in, bank balance has gone down. So cash account debit to bank. And in this scenario, bank account debit to cash, because cash has gone out, he has put the cash in the bank, deposited the cash in the bank. So bank account debit to cash. I think most of you now would have got these answers 100%, right? If not, uh, please comment in the comment section, so that then I will touch upon those topics again in the coming videos. So far so good. If you want more such entries for understanding purpose, or want to know more on general entries, please do let me know. Then we will cover this topic more and with more depth in the coming videos. So I think this was it as far as today's topic of journal entries is concerned. What I am starting from this particular video is I also do trading in the share market. So from this particular video and onwards, in the last slide, I would try and put a simple tip about the trading in the share market, or we can say investing in the share market. What rules I follow while I am doing the trading. So the first and the foremost rule for me is always buy shares with higher dividend yield. So in the scenario, if market falls substantially and the price of the share which we have bought has gone down, then shares with higher dividend yields would help us to at least get a return of 7 to 8%, or at least say 5 to 6% during the year. This would help to remain invested in that particular share. If the company is good, if the company is dividend paying, then rather than buying certain cheap, or I would say small value scripts, always invest in good shares with higher dividend yield. So thank you for your attention. I hope you have enjoyed this video. You have found this video informative. If yes, then please do like, subscribe to my channel. Please give your comments in the comment box, so that as this is I have started this channel newly, I can also think where to improve, where to explain more, what I can cut short. So this also would help me to improve the quality and the content of my videos in the coming days. So that was it from my side in this video. Thank you for your attention. Have a nice day.